The Bank of England has just raised interest rates to its highest level in 15 years.
Today, rate setters voted to raise interest rates by a quarter of a percentage point to 4.25%. This is the 11th rate hike since December and is part of an attempt to fight inflation. The U.S. Federal Reserve raised its benchmark interest rate by the same percentage just yesterday.
For more on this, let's bring in CBS News foreign correspondent Imtiaz Tyab, joining us from our London bureau today. Imtiaz, always great to see you. It sounds just like what's happening here in the States with interest rates jumping. So what does this rate hike mean for the approximately 1.4 million homeowners there in the UK?
Errol, Meg, good to be with you. And you're absolutely right. It does sound the same. The only difference is it's worse here, a lot worse. And let's get into it. It really just means that those with mortgages on what are called tracker rates, those are the ones that kind of rise and fall in line with central bank rates, and those on, quote, standard variable rates will be hit with higher mortgage repayments. Now, to give you an idea of how much more homeowners with those sorts of mortgages are now paying per month on average than they were since December 2021, which was before the bank rate started climbing from a historic low of 0.1%, they are now paying around $500 more per month. It is not a small sum of money, and now with this, the 11th rise in a row, it's going to hurt the pocketbook. But we have to point out that this is the smallest hike we've seen so far, and there is hope that it may signal this will be the last rate rise we see for some time.
Wow. And it's hard to imagine that it's worse there, considering the inflation that we're going through here. But, you know, Imtiaz, how large of a part did turbulence in global banking system play in rate setters' decision to raise interest rates?
Meg, it's a great question. And really, after the rescue of Credit Suisse and, of course, the collapse of Silicon Valley Bank, and, of course, before the February inflation data was published, investors were really split 50-50 on whether the Bank of England would leave the bank rate unchanged for the first time since November of 2021, which was the last time we saw sort of a flat interest rate, if you will. We, of course, got that rate hike instead. And while the Bank of England today noted, quote, large and volatile moves in financial markets around the world, it said that Britain's banking system remained, quote, resilient. In saying that, the central bank here is clearly trying to reconcile anxieties about global banks along with something that affects nearly everyone, which is, as you pointed out, Meg, stubbornly high inflation.
And meanwhile, Imtiaz, consumer prices fell for 3 months straight, but in the most recent data, they jumped for February. Do we know what's behind that spike?
Yeah, it was a real surprise. Folks weren't expecting it. And as you correctly mentioned, after successive decreases, prices here rose by 10.4%. And if you contrast that to inflation in the U.S., where it's around 6%, it's tough for a lot of folks. There are a few reasons for that. The UK is still struggling with expensive food import costs. This country is also heavily dependent on gas to heat its homes. And despite government tax breaks on fuel, it's still very, very costly. And then there, of course, is a massive shortage of workers here. Now, that shortage means wages are also rising as companies compete to fill vacancies and, more often than not, pass that cost on to consumers. In fact, according to some recent studies, there are 330,000 fewer workers in the UK as a result of Brexit alone, with sectors such as transport, hospitality, and retail particularly hard hit. Now, these are seemingly persistent issues which perhaps explain why over the past year the UK's inflation rate has been consistently higher on average compared to the US and other large economies in Europe. And while it might be a mistake to read too much into 1 month's figure alone, this 0.25% increase, if we are sorry, this 0.3% increase, which we saw with that 10.4% rise, which was from 10.1, it would be pretty ominous if we saw a second month of increases. That would signal that the overall economic health of this country is out of step with the rest of the world's developed economies. And that, of course, would be very, very bad indeed. Errol, Meg.
That's a vicious cycle. Imtiaz Tyab, thank you so much.
Thanks, Imtiaz.
Pleasure.